Welcome everyone. In this video, we will see if XCN coin can fall further. Don't forget to subscribe and like, and please watch to the end so you don't miss anything. Looking at the chart, when we draw a Fibonacci upwards from the bottom, we observe that the price is currently trading at the 0,786 Fibonacci level and is slowly receiving an upward reaction from this point. Fibonacci levels, especially deep retracement levels like 0,786, are considered to be highly critical zones in technical analysis. These levels are usually the points where the price is in the decision-making phase before setting a direction. The reaction from this level can be an extremely important indicator for traders. If the price finds a strong support at 0,786 and starts an upward movement from there, it would be a strong sign that the uptrend continues. In such a scenario, we can say that the price's first target could be the 0,618 Fibonacci level. If it breaks here, it is likely to move up to 0,382 Fibonacci levels. In technical analysis, a strong reaction of the price from such critical levels is interpreted as a signal that buyers are active in the market and the uptrend may continue. Also, the upward movement of the price from here could indicate that confidence is growing in the market and buyers are regaining strength. This may cause the price to move higher for a while. If supported by increased volume, this move could be much stronger and more decisive. Especially since upside breakouts often add momentum, the price can be expected to continue its upward movement rapidly and offer investors a good earning opportunity. However, in technical analysis, one should always consider negative scenarios. If the price fails to find enough buying pressure at the 0,786 Fibonacci level and starts a downward movement from there, this could be considered as a negative signal for investors. If it breaks 0,786, it goes down to the 1 Fibonacci value on the lower side. If this is also broken, the price is likely to make deeper corrections and even form new lows. In such a scenario, traders will need to be more careful and manage their risks well. Because when the price breaks a support level, it can often cause the bearish move to gain momentum. Also, if the price lingers there for a while and fails to generate enough buying pressure, it could indicate that uncertainty is growing in the market and investors are indecisive. In such situations, it is also possible that the price will follow a horizontal course and not determine its direction clearly. However, if the price dips below the 0,786 level and starts testing this area as resistance, the possibility of a continuation of the bearish movement may strengthen. Another important structure on the chart is the formation of a distinct descending channel. This channel is a technical pattern that guides price movements within certain limits. While the price moves with certain fluctuations inside the channel, we can see that the middle band region works particularly well. The middle band served as an important area in determining the direction of the price and created certain reactions on the price every time it was tested. When we evaluate the price movements at the moment, we see that the price last tested the upper band of the channel, but encountered resistance here and failed to make a successful breakout. The upper band usually works as a strong resistance point, and if the price fails to break through it, downward pressure may build up again. At the moment, the price is moving between the upper band and the middle band, and this may cause an indecisive picture in the market. If the price continues its upward movement as long as it stays within the channel and tests the upper band again, it could start a significant bullish wave if a breakout with volume occurs here. Especially in technical analysis, the upside breakout of descending channels usually sets the stage for the start of bullish moves. In such a case, a breakout of the channel could lead to a strong acceleration, and the price could break through important resistance points and start a new trend. For this to happen, the price first needs an upside reaction from the mid-band level. The middle band usually works as a support, and if the price can gain some upside momentum from there, a new test could begin. If the price breaks the upper band strongly and closes above it, there could be a positive sentiment in the market, and buyers may get more involved. Following this breakout, it would also be a healthy bullish scenario if the price retraces and retests after breaking out of the channel. Such a move would confirm the strength of the trend and would be an important step for the price to continue its upward movement. If the price creates this structure, it becomes possible to target higher levels in the short term. On the other hand, if the price fails to break the upper band of the channel and remains under downward pressure again, it may increase the probability of a decline. At the moment, the price is stuck between the mid-band and the upper band, and if there is no upward movement from here, a retracement towards the mid-band may occur. If the price breaks the middle band to the downside, then a bearish move to the lower band of the channel can be expected. In particular, the middle band area is currently a critical support area. If the price cannot hold here, downward pressure may increase and pullbacks to the lower band of the channel may be seen as the sales deepen. In such a situation, it is important for investors to be cautious and carefully monitor price movements. It should also be taken into account that if the price continues to squeeze inside the channel and follows a sideways course, market participants are indecisive, and a volumeless movement may continue before a new direction is determined. Here it is very important how it will react to the middle band. The vortex indicator, one of the most important indicators used in technical analysis, gives important signals about the direction of the price. On this indicator, a blue line above the blue line indicates an uptrend, and a red line above the red line indicates a downtrend. Looking at the current situation, we can see that the red line is above the blue line. This indicates that the bearish trend is dominant in the market and the price is moving downwards. Although the red line is currently above the blue line, no single indicator in technical analysis gives a definitive signal on its own. This bearish signal on the vortex indicator may change direction after the price reaches a certain support zone, and the blue line may move up again, especially when the price reaches a strong support zone and buyers enter the market. If the blue line crosses to the upside, this could signal the start of an uptrend and give momentum to the upward movement of the price. Also, the trend on the vortex indicator may reverse if changes in volume, momentum indicators, or other technical analysis tools show that buyers are gaining strength despite the market decline. In such a case, the red line is expected to head downwards and the blue line to move upwards. If this happens, it will be an important signal for the start of the uptrend in the market. This is why it is important for traders to not only rely on the vortex indicator, but also consider the overall market structure. Also, the red line above the blue line indicates that the selling pressure is strong and the downtrend is continuing. If this situation persists for a long time, we can say that the buyers in the market remain weak and the price is more likely to test lower levels. Especially if the distance between the red line and the blue line widens, the bearish momentum may strengthen and the possibility of the price falling to lower support points may increase. Besides, if the price is currently near one of the critical support levels and the vortex indicator continues to give a bearish signal, this indicates that a support breakout may occur and the price may target lower levels. If the price breaks the support levels to the downside and the red line stays above it for a long time, this could be a sign that the downtrend may continue in the medium term. As one of the key indicators in technical analysis, the RSI indicator is a highly effective tool in determining whether the market is approaching overbought or oversold territory. Looking at the RSI chart right now, we can observe that there is a clear support line and that the RSI reacts and moves up every time it reaches this level. In the current situation, it looks like the RSI has hit this support level again and is bouncing off it as it has done in the past. This may indicate that the market has recognized this as a strong support, and buyers are starting to step in. If the RSI moves strongly upwards from here and surpasses the previous highs, this could be an important signal that the uptrend could continue. Especially if the RSI rises in harmony with the price movements, we can say that this movement will be healthier. The RSI's reaction from this support zone may signal that the price may start an uptrend. In addition, if the RSI continues its upward movement and breaks above the 50 level, this indicates that the bullish momentum is strengthening and the market may move in a positive direction. If the RSI makes a move towards the 70 level, this indicates that the buyers remain strong and the price may be willing to test higher levels. In this case, the market can be expected to continue its upward movement for a while. We need to see the reaction here in full context. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.